Are you ready?
Ready.
All right, let's go. Kevin here, top 1 financial advisor and best-selling author. We are here to talk about the stock market. Today, we need to talk about international stocks and if they make sense to invest in, especially now. And are international stocks safe to begin with? I have a very interesting take on this as well. Now, this was a question that was asked in the comments, I think via email as well. So yes, I may not respond all the time, but I do read the comments, I do read the emails. I want to make sure that I can answer your questions as best as possible. Now, here's the thing about international stocks. The argument for adding international stocks to your portfolio is that it gives you an added depth of diversity. In that, if you're investing in the US, that's great. It is known to be the largest, most solid market in the world, but it ain't the only market in the world, and the world is changing, and international stocks can give you an added boost in growth. But also, if something were to happen in the United States, which it has, we had a debt ceiling issue last year. That happens every, 3 or 4 years it feels like. We have midterm elections. We had January 6th. So all of these things can actually hurt the US, which, you know, as an investor, you can say, all right, well, can I spread my money around? Can I put my money in places where it can still grow and not necessarily be totally dependent on the US? But also, with Russia and China, how do you invest? Does it still make sense? Because obviously we know what Russia is doing to Ukraine. That's destabilized the markets to a degree. But also China had its own issues with companies like Alibaba and several others where they were threatened to be delisted altogether, and that was recently resolved within the last, I think, 3 or 4 days, and Alibaba absolutely took off. I think they were up 13% earlier today when I decided to take a look at it. So there's a lot of pros and cons about investing in the US only and investing internationally. Here's my take though, as someone who studied economics and finance and all that kind of stuff. If you own any company in the US, you are probably already owning an international company or a company that has a lot of business in the United States. You may also own a company that you think is trendy right now. You just don't know that it is a company that is not based in the US. And that's totally fine. For example, Shopify. That's a Canadian company. A lot of people love Shopify. Shopify was up earlier today, 4.5%. You might not have known that that was technically an international company. Not just technically, actually an international company. Toyota, Samsung, companies you know of. You might be driving a Toyota or Lexus. Yes, Toyota does own Lexus. It's basically a fancier Toyota car. The nice Lexus you got is basically a Camry, a nicer Camry. But in either case, those are international companies, and you can buy stocks in those. You can also get something like an international ETF. IXUS is one of the main ones out there. It's only up 0.5% in the last year, which is significantly lower than the US stock market. But again, if you're looking for diversification, it may make sense for you. But outside of those, think of something like a Starbucks that had operations suspended in Russia. Think of a McDonald's, which has operations all across the world. Look at Nike. When we first started to learn about the pandemic, both Nike and Apple were my first hints at this. You can go all the way back to my emails. You should be on that email list. Go back to the email in December of 2019. I said, look, Nike is starting to fall. Nike is tanking because of a plant shutdown in China. That's going to affect how the company moves forward. Now, I didn't predict the pandemic or anything like that, but I said, look, these stocks are falling because of what's going on over there. That's because they have dealings internationally. They are based in Oregon. Well, Nike is based in Oregon. Apple is based in Cupertino, California. But in either case, right, these are US companies that we know and understand, but they have dealings across the world. So even if you are investing in the US only, you're still kind of dealing with an international company, or you're still investing internationally in either case. Even when we talk about supply chain, very, very, very rarely is the supply chain only in the United States only. Whether it's Ford that makes cars in Mexico, that assembles them in somewhere in Louisiana and sells them somewhere near your home. Even if it's a Tesla that they just opened, I think it was today or yesterday, they just opened a gigafactory in Germany. Again, international. That can help Tesla grow. That can help investors like me and you, but it also helps the economy over there and over here. And again, you're still investing in what is essentially a global company, even though it is a US-based firm. So in either case, yes, I think it does add diversity. I think whether you want to or not invest internationally, you kind of are by default. That's just what globalization and technology has done, and generally that is a good thing. The other thing that you want to, I guess, recognize or be aware of is how much, right? How much of your portfolio should be international. That's going to depend on your preference. I've had some clients in the past that say, I just want to invest in what I know. And if I know an international company, then fine. If I don't, then I don't. And that's kind of where I fall into, where I'm not specifically, like, I don't currently hold any international ETFs. However, I do hold a Shopify for now. We'll see how that goes. If it's a good company, I'm investing in it. And that's just the end of it. I don't really care where it's based. Others, like Vanguard, say that you want to, on purpose, right? You want to allocate anywhere between 20 to 40% of your portfolio in international stocks and bonds. Again, any textbook, any investing textbooks, the ones that I had to read to become a licensed financial advisor, the books I had to read to write other books, they all say that you should have some exposure, what we call exposure, to international markets. And again, I think that's generally a good thing, because again, what you know and think may also be a bias that can hurt you should the U.S. economy, which it has before, but should the U.S. economy falter or be a little choppy. There are some times where the U.S. doesn't do well in the market, and other markets, whether it's Brazil or China or the European sector, which is what they call it, those might do better, and you can benefit from having your money in those particular places. Again, I'll put that, actually I'll copy that description and put it down from Vanguard, where they say, like, 20 to 40% of international is what you should have. That's a little risky for me. Again, I kind of go for what I know. I tend to know U.S. companies a bit more, but again, I'm not, when I do my research, I don't say I'm looking for U.S. only. Not usually. I say, what are the best stocks out there? Which one of these stocks do I understand? Then I'm going to go there, or I'm going to get an ETF that goes there. Sometimes your ETFs can have international stocks in there, totally fine, or you can seek them out like IXUS or any other international ETF. That's not the only one. I'm not recommending that one. That's just the one that popped up in my head first. Again, a lot of index funds can be very, very similar. But that's it. International stocks, should you own them? The textbooks say yes. What do I say? Again, it's me and my portfolio, so this is, just my opinion. I think, yeah, it's fine to have it even right now, because in either case, even if you were only investing in U.S. companies like Starbucks, like McDonald's, like Tesla, you're going to be impacted in either case. If there's a plant shut down, or there's another COVID lockdown in China, if you own Nike or Tesla or any company that sells a lot of their stuff in China, you're going to get hurt anyway. So it's not going to, any company is an international company based on how you look at it. And, that's just the way that the global economy works these days. So yes, it makes sense. Yes, you may already own them in one way, directly or indirectly. And again, it does add an extra level of diversification. Now, if you have any additional thoughts, questions, or comments, feel free to let me know in the comments. In the description, you'll see a bunch of other links that you may want to follow me on Instagram, Twitter. Make sure you are subscribed on the YouTube channel. We are almost to 3.2 thousand subscribers, which is awesome, because we started at 0, which is where most people start. But we really ramped it up in the last few days. I enjoy the comments and the questions, and I'll talk to you guys, I guess, tomorrow. Bye.